Is there a cryptocurrency price correlation to the stock market? Are you intending to find a cryptocurrency stock market correlation? Do you also want to understand the mystery behind this correlation? If yes, you have landed in the right place. Greetings, friends, and welcome back to Crypto World. We've returned to this location today where we are going to discuss the price correlation of cryptocurrency to the stock market. We'll talk about when the optimal moment is to invest in stocks. So without any further ado, let's begin watching the video. And if you haven't already done so, subscribe to our channel and click the bell icon to see our most recent videos. Bitcoin's lack of correlation with the broader economy was a mixed blessing from 2009 to the late 2010s. It served as a safe haven for investors seeking an asset class unaffected by the turmoil that afflicts stock markets. However, since 2017, increased and growing awareness among retail and institutional investors has resulted in what appears to be a correlation between stock and cryptocurrency market prices. Bitcoin sparked even more interest as it evolved into an asset class. Brokerages and institutions gained regulatory traction and began offering Bitcoin-linked ETFs and 401ks, allowing investors to invest in Bitcoin. As institutions provided familiar instruments, investors appeared to become more at ease with cryptocurrencies. On April 29th, the most popular cryptocurrency had a shaky start, trading at around $39,000, down roughly 2% in the previous 24 hours. Bitcoin is still extremely volatile, trading in a narrow range around the $40,000 support level. After reaching a high of $43,000 late last week, it has since dropped below $38,000 at low points, but this is to be expected, according to Kiana Daniel, author of Cryptocurrency Investing for Dummies and founder of InvestDiva. In a recent TikTok video assessing the market, Daniel predicts Bitcoin will find medium-term support around roughly $37,000 and $31,000. Daniel, on the other hand, believes that the value of Bitcoin will rise in the long run. Bitcoin has been moving with an upward rising channel since the most recent declines began around the end of 2021, Daniel says, referring to a Bitcoin price chart. That's a long-term bullish indicator. According to experts, the $40,000 mark has emerged as a critical threshold for Bitcoin because how it performs from there may determine whether the market enters another bullish or bearish phase. A support level is a price zone where a downturn is likely to come to an end due to a concentration of purchasing power. Bitcoin's all-time high was set in early January when it nearly reached $48,000. Bitcoin fell below $34,000 for the first time in 6 months in the same month. Since reaching an all-time high of $68,000 on November 10th, Bitcoin has lost 40% of its value. An investor, like any other business, has expectations and feelings. What are your thoughts as an investor? Please let us know in the comments section. Now let's take a look at a few of them now. Because investors appear to perceive Bitcoin-like stocks as stocks, it's possible that digital assets will react to market influencers similarly to stocks. The Federal Reserve, for example, announced on May 4th, 2022, that it was raising its target federal funds range to 0.75% to 1%. On May 5th, 2022, Bitcoin fell to around $3,100. The NDX fell nearly 1,400 points, while the SPX fell about 150 points. Even if the Bitcoin price was significantly higher, the effect was the same. The state of the economy has a significant impact on investment prices. The gross domestic product, or GDP, measures the growth and contraction of the economy over time. It has inherent cycles that it adheres to, but major events could shake it out of them. For example, the COVID-19 epidemic in 2020 caused an economic slowdown, resulting in a brief recession and drop in stock market prices. Monetary policy changes, such as interest rate cuts, can result in lower bond yields, causing investors to lose interest because they believe they can earn a higher return elsewhere. Furthermore, anti-inflationary monetary policy actions may slow economic growth, influencing stock and cryptocurrency prices. As of the time of this video, Bitcoin, Ethereum, and other cryptocurrencies are trading at today's prices. Because of persistent economic and geopolitical uncertainty, Bitcoin and other cryptocurrencies have started the week slowly. Bitcoin, the largest crypto coin, was able to maintain a short-term gain during the early hours of Monday, but by the afternoon, it had fallen below the $40,000 support level and has since hit multiple low points throughout the week. The cryptocurrency markets have occasionally tracked the stock markets, which experienced a technology-led sell-off earlier this week in response to corporate earnings data. The cryptocurrency market, like the stock market, has been under pressure for weeks as investors deal with rising inflation, a flurry of economic events fueled by Russia's invasion of Ukraine, and the prospect of the Federal Reserve tightening monetary policy. The Federal Reserve's next meeting is approaching, which could add to investor anxiety. What should cryptocurrency investors know? According to experts, the crypto market has been more closely mirroring the stock market in recent months, which, combined with increased popular use and lower pricing at the start of the year, has made it even more intertwined with developments in Eastern Europe, inflation, and the Fed's tightening monetary policy. In the short term, these factors have caused some noise and increased volatility in the crypto and stock markets, but this is normal during times of uncertainty. The cryptocurrency market is notorious for its volatility, and experts predict that the ups and downs will continue. With increasing institutional use of crypto, increased correlation to other risk assets is to be expected, McMillan says. So, what should you do in light of this upheaval? Nothing, according to financial experts. It is not a good idea to let a price increase influence your long-term investment strategy. Even more importantly, don't go out and buy more cryptocurrency just because the price is rising. According to experts, cryptocurrency prices are just as likely to fall as they are to rise, and this is something long-term crypto investors will have to deal with. As a result, unless you are completely knowledgeable about cryptocurrency, you should never invest in it. Do your research and only invest what you're willing to lose at the outset to avoid panic selling or buying later. According to experts, cryptocurrency investments should account for no more than 5% of your total portfolio. Furthermore, before investing any additional funds in a speculative asset such as cryptocurrency, ensure that you've covered all of your financial bases, from retirement accounts to emergency savings. Stocks and Bitcoin are now moving in tandem. Prior to the outbreak, Bitcoin and Ether, for example, had little correlation with major stock indices. They were supposed to aid in risk diversification and protect against volatility in other asset classes. This changed in early 2020, however, as a result of unprecedented central bank crisis measures. Both cryptocurrency and stock prices in the United States have risen in response to improved global financial conditions and increased risk appetite among investors. For example, from 2017 to 19, Bitcoin returns did not track the S&P 500, the United States benchmark stock index. The daily correlation coefficient was only 0.01, but it increased to 0.36 in 2020 and 21 as the assets moved more in lockstep, increasing or decreasing at the same time. The stronger link between crypto and stocks is also visible in emerging market economies, where several have led the way in crypto asset adoption. For example, in 2020-21, the correlation between the MSCI Emerging Markets Index and Bitcoin was 0.34, a 17-fold increase over previous years. Higher correlations indicate that Bitcoin has historically been a risky investment. Contrary to popular belief, its correlation with stocks has risen above that with other assets such as gold, investment-grade bonds, and major currencies, indicating that risk diversification benefits are limited. So far, we've talked about cryptocurrency. Let us examine the impact they have. The growing connection between cryptocurrency and equities raises the possibility of investor sentiment spillovers between the two asset classes. Indeed, according to our research, which examines price and volatility spillovers between cryptocurrency and global stock markets, spillovers from Bitcoin returns and volatility to stock markets, and vice versa, have increased significantly in 2020-21 compared to 2017 through 19. Bitcoin volatility accounted for roughly 1/6 of S&P 500 volatility and 1/10 of S&P 500 returns during the pandemic. As a result, a significant drop in Bitcoin prices may increase investor risk aversion, leading to a decline in stock market investment. Spillovers from the S&P 500 to Bitcoin are of comparable magnitude on average, implying that sentiment in one direction influences sentiment in the other. That's all for this video. If you like the video, then like and share it with your friends. Also, comment down below if you want to say anything about it. If you have any queries and suggestions to give us, just comment down below. Your feedback is always welcome by us. Also, if you want to watch more videos like this, then subscribe to our channel now and hit the bell icon to get in touch with our latest videos. Please subscribe to our channel, and thanks for watching.